All right. Can you all hear me clearly?
Yes, we can hear you.
Okay. Good evening, ladies and gentlemen. I would like to welcome you all to this webinar with the title Financial Literacy. Welcome from wherever you are, whether in Algeria, in Russia, or Zimbabwe. Thank you for joining us today. So before we start, we bow our heads and pray. Almighty Father, we humbly come before your throne during this time. Please guide us and help us to have a fruitful discussion. In Jesus Christ's name we pray. Amen. All right, so as you all know, today we're going to be talking about financial literacy, and we have a guest speaker with us. Most of you know him as Takonda Sikali. He's a financial literacy trainer and an investorpreneur. So before we start our meeting, I would like to acknowledge our sponsor, Chuck's Bank. They're the ones who are sponsoring this meeting for us today. We're going to record it for the benefit of those who are not able to join us, and then we'll post it on our Telegram account like always, so that those who are not here can get the information. Those who want to go over it again can also get the information. So if you'd like to link your money to send money, sorry, you can use Chuck's Bank. I'm going to send the details in the chat. At this moment in time, I'd like to leave this time to our guest speaker, who's going to have more of a discussion with us rather than a presentation. Mr. Sikala, I leave this time to you.
Thank you, my brother. So, can you confirm that you can hear me? Am I audible?
Yes, you're audible.
Okay. So to kickstart our discussion, I really want this to be a discussion and not a lecture. So I'm going to ask you, my brother Kieran, our host for today, our panelist actually. Yes, what do you think are the benefits of owning a business? Imagine you owned a small tuck shop or a small business on your own. You're a solopreneur. What do you think are the benefits of owning or actually of being a business owner, just in general? Can you talk to us about, just the benefits in general? What do you think? What are the benefits of owning a business, being a business owner, small, big, whatever size it is?
I don't have a lot of information when it pertains to businesses, but I would think one of the benefits of being a small business owner or maybe like owning a tuck shop is that you are flexible in terms of your working hours. You're your own boss, so you can manage your hours. So maybe you can work for like 4 hours a day, 5 hours a day, and you also have creative power over your business. You're the one who can change anything at any time. Maybe you want to adjust to certain trends that are happening. Maybe people are selling uh chips. I remember back in our day, there was a time when jiggies were popular. Maybe you want to change that. So as a business owner, it's up to you. You can do anything that you want with your business.
Okay, okay. Thank you for that. What about the definition of an asset? The word asset, when you hear that word, what do you think that means?
When I hear the word assets, I think of value. So I think I would describe it as something of value.
Okay, something of value. All right. Thank you for those responses. We are going to start from there and then pivot from those responses. So before I go any further, for those who have not seen me before or met me before in person, I've just started my camera. This is my face. This is Takonda Sikali, the person who is going to be talking to you today. I hope that you are going to be enlightened. So let us continue with our discussion. We're going to start with the definition of what a share is, right? So when you hear of the word share, a share is the unit of ownership in a business. That is the definition of a share. A share is the unit of ownership of a business. I believe most of us here, we own the gadgets that we have used to join this meeting, right? You own the gadget. You are an owner of the gadget. An owner of a business is called a shareholder. What's the relationship between a share and an owner of a business? We are saying a share is the unit of ownership of a business. Whoever owns a business, they've got shares in that business, right? So a share is the unit of ownership in a business. If you own a business, it simply means you are a shareholder in that business. So if you hear the word share, I would like for you to think of it as we are talking about ownership in the business. And as my brother has already alluded to, that some of the benefits of being a small business owner. So we'll start from there. Imagine you own the tuck shop back at home in Zimbabwe. You run the tuck shop alone. You are a small business owner. You just run the tuck shop alone. You own it. You are a shareholder. You own 100% of that project, of that tuck shop project. That you own 100% of that business. You are a shareholder in that business. You are alone. That you own 100% of the business. So I need you guys to understand that the word share, it simply means you own. Uri muridzi webusiness. And yet, tinoona sei kuti uyu munhu muridzi webusiness, tinotsvaga kuti munhu uyu ane mashares mangani mubusiness here. And it means shareholding can be expressed as a percentage. You get to know what interest, what stake, what percentage of the business do you own. If you are a solopreneur, you run your tuck shop alone, you own 100% of the business. Right now, imagine my brother Kieran and I. My brother, he has this tuck shop. He's running his project. He's making profits, and life is good for him. And I'm like, I don't have the knowledge, to actually start this tuck shop project. But you know what? I would like to partner with you, my brother. Right. So I don't go empty-handed. And the ndakabata zero. Don't know tichi mukoma Kieran. I would like to partner with you in this project. Tuck shop say the ownership. And I have to bring capital to him. I have to bring some money to him, right? And then we can become partners. So partners in a project, we can be equal partners, or he can sell whatever percentage he is looking to sell to me, right? So let's park that concept aside. Let's go back to the notion of what an asset is. So assuming that, you've done your budgeting well, you have decided that, you know what, I've got a certain amount of money I've saved in my savings. I would love for that money to grow. I want to make that money work for me, right? What you need to do now, you need to invest, right? So why are we supposed to be investing? What is investing, right? Investing, you are putting aside a portion of money and you put it to work with an expectation of earning a return on that money in the future. Right. So as students, I believe most of us here are students. What are the alternative investment options that we have? Right. We can become business owners by simply buying shares, which is the main thing for today. You can get into your real estate, right? I'm sure I've put messages out there that say, did you know that for as little as $5, you can become a property owner in Zimbabwe, right? You do that through buying ownership into funds that are into real estate. For example, we've got what is called the Tegere Real Estate Investment Trust, right? That fund, it built the Madokere Mall. Some of us may know it, some of us may not know it. After the webinar, we can go and Google about this. The Madokere Mall, I'm sure it's by social media. People were arguing, is that really a mall, or do Zimbabweans really know a mall? Which is an entirely different topic for another day. But for today, we are simply saying, if you own a piece of that fund, what is a fund? Investors, they come together. We come together and we say, you know what, we've got some money here and we'd love to get into real estate. What do? We go and we find a professional fund manager and we say, you know what, here are our monies. We'd love to get into the real estate market, right? And the fund manager will say, you know what, I think that in the real estate market, what has got the most promising returns as of right now is let's buy some land, let's develop it, or let's sell it, or let's build some boarding houses, right? So these things, they are not really difficult to do. They just need people who are determined and they come together and they can do this. So the Tigera Registered Investment Trust, it's available on the Zimbabwe Stock Exchange for as little as $5. You can get ownership into that fund. You will be owning some properties, including the Madokeremo that I'm talking about. They've got around 5 properties in their portfolio. So you'll be owning that Madokeremo, and there are tenants, right? Tenants who rent the spaces in the mall, tenants they pay rent. That rent is going to come to you as the owner of the fund. We're going to explain more in detail the benefits, right, of being registered through the Tigera Registered Investment Trust that I'm talking about, or it's almost the same way that the shareholding or ownership of businesses works. Another alternative investment option that we have as students, we can do joint partnerships. I identify my brother Kevin has got a brilliant idea. He wants to start a business of drop shipping, but he doesn't have capital. We can partner, right? And I give him the capital. He runs the business. We sign up a contract. How are we going to divide the funds? How are we going to share the profits and stuff like that, right? So we are living in the digital era, right? So most of the stuff is happening digitally. If you have got a skill that can be monetized, maybe you are good with explaining some stuff, you can consider tutoring English where you are. You can tutor high school students, mathematics, physics for a certain fee, right? You can learn on YouTube how to use Canva to make is it posters, flyers, business cards. That's your graphic designing, right? So you simply need the gadget and the internet. You go on YouTube, you learn your graphic designing, and you do your freelance as a student, right? You are studying, but here and there you get to make posters for somebody, maybe Asa or me or somebody else, right? You put yourself out there. You can learn. There are so many courses, free courses. I think they are there on the internet or on YouTube. They teach Python, Java, these programming languages, right? You can definitely learn something to do with programming and see how you can monetize it if it's your talent, right? So you can also get into agriculture, agribusiness. You don't need to own a farm for you to start a business there. You just need to do your research. You can rent. Did you know that you can actually rent an acre of land for less than $70 per month? So if you get a very good location, rent an acre, right? Plant your tomatoes, plant your onions. They take 3 to 4 months. Plant some cabbages there. In recent times, actually 2 or 3 months ago, there was a shortage of onions and tomatoes in Zimbabwe. I was actually surprised, like, the whole population, 15 million people in Zimbabwe, and how we consume fresh vegetables. We are really having a shortage. We are importing tomatoes and onions from Zambia, all the way from South Africa, importing from other farmers. Now that's a gap in the market that you can actually do something about. You don't need to own the land. You can rent, get your seeds, get your knowledge right. What do onions need? The king onions or the shallots, maybe it's garlic that you want to get into. What does it really need? That you get to know what you're doing, and then you can farm. Start small, half an acre or an acre, and see where that takes you. 3 to 4 months, you are good, right? Some of us, I've met people who are into buying cattle, right? You buy cattle, you take it to the abattoir, right? They will say, you know what, you are paying $7 a kg. You buy a beast for $350, kumusha. You go to the abattoir, they slaughter it, and it gives you somewhere around maybe 300 or 400 kilograms, and they say $7 a kg. You're cashing it, right? So there are so many things that we could be doing out there as students. I encourage you to go to the website, the Startup Biz Zimbabwe. So just go to your Google and you say Startup Biz Zimbabwe. Panama business plan, you see a lot of things to do with potato farming, graphic design, everything. Like their business is just to sell business plans, but at least you can get an idea. So how do you get to start with, okay, I want to do a side hustle. Where do I start? When you want to do a side hustle as a student, where do you start? Think about, okay, do what is called a SWOT analysis. Think about your strengths, your weaknesses, your opportunities, and your threats. So think about those things that you are very passionate about, right? Maybe you are into agriculture, you love farming. Start there, right? Try to establish something there. Start there. Of course, you can always keep learning, right? And get into other things, maybe see things you can be selling on the internet. There is network marketing nowadays. There is social media management. If you are good with running social media pages, there are companies out there or there are people out there who need those services. You simply need to establish yourself and put yourself out there, right? So these are in general, I've tried to summarize, these are some of the options that we have as students, things that we could actually get into, things that are actually practical. Now, back to the theme of today, which is mainly to do with shareholding. So what is an asset? An asset is anything that has the potential to put money into your pockets, right? An asset is anything that has got the potential or something that actually puts money into your pocket. We call that an asset. As my brother has alluded to, he said something of value. What's the value in an asset? It can actually put money into your pockets. A liability is something that takes away money out of your pockets, right? So an asset is anything that puts money into your pockets. A liability, anything that takes money out of your pocket, right? So we've got different classes of assets. We've got ownership in businesses, your shares. We've got what are called treasury bonds or government bonds, treasury bills. We've got your commodities. If you want to invest in mining, you want to invest in oil, grains. And about mining, did you guys know that the Zimbabwe Investment Development Agency, ZIDA, it is now offering a platform where if you have a mining claim, but you don't have investors who want to invest, or you don't have the cash actually to be utilizing your mining claim, what do? You simply approach ZIDA and you tell them, you know what, guys, I've got a claim, but I don't have the capital to exploit this claim. They'll set you up with some investors who can be interested, right, in funding your exploitations, in funding your claim. So these things, they come back to who owns what, right? You need to be financially literate in terms of shareholding. How does it work so that you don't get people who exploit you? I'll give you a very good example. Did you guys know that Steve Jobs, right, the founder of Apple, he was kicked out of his own company because of he was financially illiterate when it comes to these shareholding things. It also happened to Elon Musk back in the day with PayPal before it was sold to eBay. They kicked him out, right? The original plan was to call PayPal X. He wanted to, he's now calling, he branded Twitter to X, right? So the original plan, he actually wanted the PayPal, the whole platform back in the day around 2003, 2004 to be called X. He had all these plans, but because he was financially illiterate when it comes to shareholding, he just didn't understand how it works. They kicked him out, right? So you actually run this risk. You are an aspiring entrepreneur. You want to establish a business someday. You've got a project, a business idea that needs funding. If you really do not understand how these things work, someday somebody will exploit you. They will kick you out of your own business idea and stuff. So I'm really grateful you guys are here so that we can discuss and we can help each other when it comes to these things. So I'm coming back now with, so if you have any question, please put in the chat box. I will answer it as we go. So coming back to the issue of shares, we've established that a share is a unit of ownership in what? In a business, right? So why would you consider becoming a shareholder? The top two reasons. Imagine somebody who owns a tuck shop. That person, at the end of the day, when they restock stuff into their tuck shop, their groceries they're selling in the tuck shop, the money that is left after they've paid their worker or after, if they're the one working in that tuck shop, money musara after muna restock, atenga back all the groceries, the things or the coming week or the coming month, money musara, those profits, they belong to the owner of the tuck shop. And we have been saying, who is the owner of the tuck shop? The owner is called the shareholder of the tuck shop. This is the exact same concept that happens with big businesses like your Econet, your Delta Corporation, your OK Zimbabwe, your Apple, your Microsoft. So at the end of the day, when those businesses have paid all their salaries, their bonuses, all their obligations, their loans, the money that is left over there, it belongs to the owners of that business. Who is the owner of that business? Is the shareholders, right? The shareholders are the ones who own the business, right? So it means the business is out there to make profit on behalf of who? On behalf of the shareholders, right? So Chibuti, can I tax shop, tamati profits. And if you're running a small business on your own, the profits that remain at the end of the day, the business is there to take money out of your client's pockets or your consumer's pockets, right? And put that money into your pockets. You can choose to reinvest, right, to grow a business. If it's a tax shop, you can choose to open another tax shop in a different location, or you can choose to use that money as you please, maybe pay school fees, maybe go for a vacation or travel as you please. But the fact is that money is yours, right? So when we come to those big businesses now, your Econet, your Delta, we are saying at the end of the day, kana pasara mari vakubhadhara all their obligations, mari iyoyo ndeyema-shareholders. Va-shareholders ndovaridzi ve-business. So I need you guys to understand kuti at any given moment in time, pauri kuita transaction, whether watenga mvura, watenga salt, haisi mana from heaven, that you are interacting with the business. Every business has got an owner. Business arangomukira veipapo. Every business, it has got its owner, right? And the business is just there to take money out of your own pockets, putting it into the pockets of the whole of the shareholder. Why? Because the primary reason why you and I would start any business is to make profits. My business has my charity organizations, right? The problem is this business was not profitable. CEO akadzingwa, right? Akadzingwa, they fired him because this business was no longer profitable. The role of business, the primary reason of going to business, we want to make profits. We make profits for who? On behalf of the shareholders, right? And who is the shareholder? We said the shareholder is the owner of the business. So I need this to sink into you guys. Whenever you spend, whether utenga data, utenga mvura, you like it or you don't like it, every single time when you spend, right? Pana shareholder somewhere who is gonna wait for the profits at the end of the day. And can I big businesses, these profits are now called dividends, right? It's just a different word. These profits are now called dividends. Why are they called dividends? And what are dividends? Can I pay my with accounts? They might remember this word, like dividends. We are saying, can a company have more profits? Out of those profits, it can distribute part of those profits to its owners. Who are the owners? The owners are the shareholders. And part of the profits they go to the shareholders. Part of those profits are now called dividends. Kana chichidila big businesses. But kana chichidila my own business, my own tax shop, those are the profits. It's still the same thing, dividends. But kana boss took the 1 or 2 to know about my profits. And it kana my business, it's called dividends. You can actually Google this stuff as we are talking right now. What is a dividend? It's part of the profits that have been made by a business that are being paid to shareholders. So this is reason number one why we should consider becoming a shareholder, because we are simply saying at the end of the day, every business out there, it exists to make profits for who? For the owners of that business. And that's how businesses thrive or survive. They are out there to make a profit. And so let's just go to another reason. I call it primary reason number 2 why you should consider becoming a shareholder. Now, imagine somebody who bought a house, who borrowed a brook, in 2009, maybe the house cost $200,000. If they wanted to sell that house today, right? Now, let's have 2 scenarios. Scenario A, this person maintained their house. They would refurbish it. They would put tiles, solar geyser, CCTV. They put a swimming pool. Every 2 years, they would renovate the house. They put, some floors on the house, everything. The house is just it's astonishing. It's in a great state of the art, right? Now, if that owner simply says or simply puts a sign negative for sale, you and I are going to kill each other to not be the taker. We're going to offer a higher amount of money without being asked, right? Like the house is going to attract us because of its features, because of Jairi. And naturally we want to pay a higher price without the person selling the house actually saying how much are they selling the house for. That's scenario A. Scenario B, in that way, no CCTV, no swimming pool, no garage, nothing. It has never been renovated. The tiles are in a terrible state. The roof is falling in. If you just put a for sale sign there, what's going to happen? Naturally, you and I are going to offer a very, very low price, naturally, without being compelled. And so if the owner of this house were to sell their house today, if it was in a good state, it's going to attract a profit. If it was in a bad state, it's going to attract a loss. Now we call that capital gains, right? So if they sell their house for a profit, for example, maybe they bought their house in Brook in 2009 for $200,000 and they decide to sell it today, it's in such great condition, they can sell it for $1 million, somebody will buy it. And if they're interested or if they're happy with the prices, somebody will buy it, right? So from $200 to $200,000 to $1 million dollars, right? That's the difference. So we call it capital gains. The profit that they will make is $1 million minus $200,000. That $800,000, that profit, it is called capital gains. Now, my capital gains, they exist in shareholding. We are simply saying you own a piece of a business, you own one share of Econet, you bought it at $1 by Zimbabwe Stock Exchange, and you are no longer interested in owning my shares in Econet, or you want your money back. What do? You can sell that share for $1.50 or for $2, and you get your money back. That is called capital gains. The one-time profit that you make when you dispose of an asset like a house, like shares, the one-time profit you make there, it is called capital gains. So capital gains, they exist shares, right? So let's now get into what is the stock market. Where do you buy shares? How do you buy shares? So there is a thing called the stock market. I want you to follow Zimbabwe Stock Exchange. The phrase Zimbabwe Stock Exchange. It's an exchange. What is an exchange? Somewhere where can you barter trade? Zimbabwe Stock Exchange. Let's go it the reverse way. Zimbabwe Stock Exchange. It's an exchange. It's a marketplace. And then stocks, Zimbabwe stocks, stock, share, equity, that it's ownership in a business, and it is stock, share, or equity. It's ownership in a business. Ownership in a business. Like which businesses? Zimbabwean businesses. Zimbabwe Stock Exchange, it's a marketplace or it's a platform where buyers and sellers into different businesses meet. So the stock market now, it's a platform where businesses go to raise capital. Let me give you an example, an analogy. Econet Zimbabwe. Econet was founded in 1994, but it was licensed in 1998. It was listed on the Zimbabwe Stock Exchange in 1998. Now, when Strive Masiwa founded that company, and he needed capital, I think we can agree, there are only two ways that we can actually use to fund a business. You are going to go to the bank and take a loan, or you're going to find a loan from somebody, or you're going to talk to your friends and say, you know what, guys, I've got this project, I've got this idea that I want to do. Give me your money, but not as a loan, right? I will give you ownership, right? And you can participate, you can partake in the profits that just will make out from this project. Then I touch up on partnering with my brother Kieran here, right? I will give him some money and say, you know what, I simply want to share with you 50-50. But I'm not comfortable with 50-50. Let's do 60-40, not to go. And we go ahead with that, right? So we are simply saying here, when Strive Masiwa started his company, he needed capital to fund that company. He wanted to expand, to cover the whole population, the geographical area of Zimbabwe. Where was he going to get that capital from? He was either going to go to the banks, right, and borrow, or he was going to try to find people to talk to you and I and say, you know what, guys, my name is Strive Masiwa. I've got this company named Econet that I started. It's a telecommunications company. This is our business model. To know to get a text message and all of that stuff. And that is what he was going to say. But he was not going to know who is interested in giving him capital in exchange for ownership. He was not going to know Kuchiredzi kuna Tendai, kana Victoria Falls kuna Tafara. He is not going to know that. It's not feasible. Even when the international community who is interested in giving him capital in exchange for ownership in that business. So what does he do since he is looking for this capital? Let us imagine that he needed $100 million for business. And the banks, they can only give you, because of regulations, they can only give you so much of an amount, right? So let's imagine the banks we can only give you 50 million. Where was he going to get the other 50 million? He went to the Zimbabwe Stock Exchange. He went to the stock market, which is the platform I'm saying businesses, they go to the stock market to raise capital, right, from investors or from the investing public. He went to the Zimbabwe Stock Exchange and he presented himself, you know, guys, my name is Strive Masiwa. This is Econet. This is the business model. I'm looking for $50 million dollar a share, right? So I hope you guys understand the difference between a share and a loan. A loan to wapa munhu mari achakudzosera mari, ari obliged kutokudzosera mari ne-interest pamusoro. Shares wapa munhu mari for an ownership, for a stake, for ownership in their business. You are not going to say to that person, ndiwe mari yangu back, because I see loan. Wapa munhu mari ukatichi, I need ownership in a business. And that's what shareholding is. That's the difference between shareholding or share capital and your loans. So I need this to be distinct. So we got $50 million from the banks. That $50 million, let's just imagine, he said, we've got 50 million shares for $50 million dollar a share, right? So the Zimbabwe Stock Exchange, because no platform, we are looking for businesses to own or projects to fund, ideas to fund. We have the capital. The Zimbabwe Stock Exchange is going to publish, it's going to put it in the ZBC News, my newspapers, my brokerage firms, my wealth management firms, right? They will put it out there and they will say, notice is hereby given. Pani company Econet Zimbabwe. They are looking for capital, they are selling their shares, dollar a share. If you want to participate in this, that is what they call initial public offering. And I'm sure we've come across this word, initial public offering. If you're interested, right, they will put on the instructions in the newspapers and in the news, and you follow the instructions. So, if you and I we've probably seen these things, newspapers and news, but because we really don't understand, it passes us. But if you and I actually understand what is going on there and what it means for me to have ownership in business, Econet, what it means, right? You're going to buy those shares, you're going to follow the instructions. So we are saying the stock market, it is a platform where investors, they go to find businesses to invest their money in. How do they earn a return on their investment? How do they earn a return on their money? They earn it through my dividends. Business running investor money. Profits richamupa vachagovana because ndomari dzebusiness. So if you are no longer interested in owning that business, what do? You don't go to the business and say, give me back my money. It was not a loan. You're going to go to the stock market and find somebody who is interested in owning that business, and that you already own, and you sell your ownership to that person, and you are not the one who is going to market the business. Remember the analogy of real estate and if the house is well taken care of, it's going to attract buyers on its own. It's the same thing. If the business is consistently profitable, if the business is well managed, it pays out dividends annually, the shareholders are well taken care of. Other shareholders or other investors will be interested, right, in owning that business. Naturally, they want to offer higher prices for them to own a piece of that business, right? So you're not the one who's going to go out there and try to market the shares and say, hey, you should buy. No. The business is going to attract its own investors. It will make a market for you. So your job is to just choose businesses which are well managed, businesses which are going to do well over time, right? If you choose the right businesses, they will make a market for you, and you can buy the shares maybe for 50 cents a share. You sell them for $1.50 or for $1 a share sometime in the future. So we are saying the stock market, it's a platform where investors, they go to put their money to work by buying shares or by buying ownership into businesses. The stock market, again, it is also the platform where businesses go to raise capital. If one day you find yourself, you need capital and you've got a viable business idea, you can consider going to the Zimbabwe Stock Exchange, right? They will publish example, it has happened with so many businesses. Right? When people initial IPO, if you are looking to raise funds from the public, so I hope this concept of the stock market, it's a platform where businesses go to raise capital. It's a platform where investors who have got capital but are looking for where to put their money to work, they go there, they meet. So the stock market, it's a platform where businesses and investors meet, right? It's that platform of exchange. I hope this concept is clear, it has been understood. I also hope that we have understood why should you buy shares, right? The two primary reasons that I've talked about, your capital gains and your dividends, why you should buy my shares, right? So I'm going to talk something about the stock market, and then we'll talk about a few of secondary reasons why you should buy my shares, and then I'll answer my questions too. And I want to thank you guys. So the stock market now, it is a government regulated department, and so izvo zvekutenga notengesa mashares public companies haisi ponzi scheme kana pyramid scheme yokuti kwanzi uyana somebody joinisa someone. No. This one, it is regulated by the Ministry of Finance and Economic Development. Anyway, under the sun, here in Nigeria, the Abuja Stock Exchange, it is regulated by the Ministry of Finance in Nigeria. The Johannesburg Stock Exchange of South Africa, it is regulated by the Ministry of Finance and Economic Development in South Africa. In Nigeria, the Nigerian stock market is called Nigerian Exchange Group. It is regulated by the Federal Ministry of Finance in Nigeria. So at any given moment in time, the government can actually extract the details. They can actually know, right, who owns which shares, who bought which shares, when, what is their name, what is their bank account. If you bought the shares online, what was your internet, your IP address, they actually know. If you commit fraud, I'm sure that when I freeze your assets, they can actually freeze your shares. So this is serious business, guys. Small scam, this is my Ponzi scheme. So the moment you buy your shares, the Ministry of Finance commit a fraud, they will actually know. Kiren has got 300 shares. Amatenga musi wakati, bank account yake yakati, address yake yakati, kana achida zvawo kutsvaga vanoita sei vanokuwana. So zvokutenga nokutengesa mashares, it's different from forex trading, it's different from Bitcoin. Bitcoin haina jurisdiction kana mutemo inoigavhena. Stock market anyway under the sun ane mutemo inoigavhena. The stock market in Zimbabwe, it is regulated by we've got actually two stock markets in Zimbabwe. The Victoria Falls Stock Market Stock Exchange, it operates in USD. Then the Zimbabwe Stock Exchange, it operates in Zim dollars. These two stock exchanges in Zimbabwe, they are regulated by the Ministry of Finance and Economic Development through what is called the Securities and Exchange Commission of Zimbabwe. It's a department, and it renewal reporter, kuna Minister of Finance direct. So it means part of the job description, they have to make sure that the Zimbabwe Stock Exchange and the Victoria Falls Stock Exchange, they are actually operational to their full efficiency, upon fraud, illegal. So I need you guys to understand this is serious business. I see scam, it's not a Ponzi scheme. We need to appear, shareholder register. The company will know the day you buy your shares. And I also hope you guys did understand. But that when you're interested in owning the business, what do? You go to the stock market when you sell your ownership to somebody else who's interested in the business. It means when you buy my shares, can you see the IPO? Your money is not going to the company because company from the first ever shareholders. The first ever shareholders, when it comes to primary market, you can Google about this. What is the primary market? It's the first ever shareholders. In 1998, when Magatanga kupa equity mari, when the primary market. Secondary market, it's now the stock market, where particularly if you are no longer interested in owning Econet, go there and sell your shares. Find somebody else who's interested in Econet, give them your shares, they will give you money. The beauty about this is they will never know at which price did you buy the shares, right? They will never know that. You can simply put whatever price you want to sell it. It's a willing buyer, willing seller thing. Nobody controls these prices. And if you are not opening a price, per market will say, right? You don't sell if you want to sell and you're not happy with the prices. You don't buy if you want to buy and you're not happy with the prices. And it's a willing buyer, willing seller. You set your own prices according to what's happening in that environment. And so my shares, they are bought and sold to stock market. And I hope you understand, when you go to the stock market and buy shares, if it is not an IPO, right? If it is not an IPO, mari yako unaenda somebody else, mari yako enda company dara, munhu akaenda company is not destabilize a business. You can't be going back to business. You disturb the capital structure, the business, right? So I hope we have answered where do we buy shares, right? We will come to the question that says, what are the requirements to become a shareholder? How risky are the IPOs, right? And initial public offering, how risky is it? So this now depends. I would say it's a 50-50%. It's a 50-50 phenomenon, right? So it depends on the business model. It depends on the business model, right, of the business that is offering the IPO. So what it means is you now simply need to do your own research. Okay, what is the business model? How viable is this business model? You do your independent thinking. How viable is this business model? Is it sustainable? Sustainability. Is this business model sustainable going into the future? I'm going to give a case study. Pane company means West Properties. Some of us may know it. If we don't, please, Kenneth Sharp, let's Google this company. Yakaita initial public offering yayo some few months ago, I think around March, April, somewhere there, 2023. That company, into the property developments, they got some apartments and high-end, my townhouses, right? High-end for the high-end market, right? So when that company offered its stocks for IPO, in this industry is the real estate. What else? Who is the target market? Is the business sustainable? If you have confidence in the business, you can actually buy those shares, partake in that IPO, you will be good. But if you don't have confidence, if your independent thinking suggests that the reasoning is flawed, because when the business comes for an IPO, I remember the business model, they come with more projections. They actually projected, from year 1 to year 5, we are projecting that we are going to have a revenue growth each year of 25%. We will start paying dividends at this stage, right? They actually do that. We will start paying dividends at this stage. Our payout ratio is going to be such like this. They give you all of that information. You simply have to verify it. If you agree with it, right, and if you are right, then you're going to make money with that IPO. If you don't agree with it, right, and it turned out you are right, you protected yourself. If you didn't agree with it and you were wrong, you might miss that opportunity. But the bottom line is, in Zimbabwe, my IPO, they are 50-50. This study and Kenneth Sharp and West Properties, his IPO was kind of a flop. It was undersubscribed. People were not confident. People are not confident in the business model or the sustainability. I myself, I looked at the reports, the projections, and the projections. I looked at these projections, revenue, and all of those things. I didn't agree with these numbers. They were inflated. He was too optimistic. Those are projections, he was too optimistic. Considering my financial statements I got over the past 3 years, his profit is actually declining. So I was like, okay, if I give you my money and you undertake this project that you want to do, the projects you are already running, you are making, your profit is declining year on year for 3 consecutive years. If I give you my money, what guarantee do I have that you're actually going to start growing your profits? I was like, it doesn't make sense. And you're actually making declining profits 3 consecutive years. For me, that was a red flag. And I decided to sit out of that West Properties. I decided to sit out of it, that IPO. And then I'm talking about West Prop and the VFX. Is it advisable to buy shares in the VFX considering liquidity? Now, considering liquidity, by Victoria Falls Stock Exchange, can still liquidity to how available are the shares? Are you able to buy the shares power finger or power dealer? Right? So liquidity speaks to the readiness, how readily available are the shares. If you want to buy, if you want to sell, don't buy as at any given moment in time. So liquidity on VFX is very low, but it is improving, especially considering Insco and Simsa Brands migrated. Insco and Simsa Brands, they are very big companies, those ones, and they have brought liquidity to VFX. So I would say, go back to the drawing board. Why are you trying to invest? Why do you want to invest? You don't invest in VFX, you invest in the business prospects, the sustainability of the business, the viability of the business, its capability to make profit going into the future, right? Its capability to be well managed, could also capital gains if you decide to sell the shares in that business. That is what you invest in. So the liquidity or not, I see the question as such, but we need to narrow down the businesses. I have seen West Properties is illiquid because it was undersubscribed. But my business, I don't get Insco, Simbisa Brands. Those businesses, they are very liquid actually. Most of the times, whenever you want to buy even one share, I've bought 5 shares, 7 shares, any number of shares you want to buy, you can get them. Those businesses are liquid. So let's take our mind off. Let's not approach this thing as we're investing in a stock market. You're investing in a business, right? A business, imagine it to be a property. If the property is well managed, it's going to give you money. If a business is well managed, it's going to give you money. That's the thinking here. Then the effects of inflation on the value of stocks. So, right, IPO, in closing on that question, IPO, it depends on the environment. So I've given you the scenario of Zimbabwe. It's a 50-50 thing, and it has to do with confidence. In the US now, research has shown that usually most companies that IPO within their 10 years of doing business, they usually close down, they close shop over, right? So again, it's a 50-50 chance. It comes back to the drawing board. Do you agree with the projections? Do you agree with the thinking, the underlying assumptions of the business? What do you think about it? Do your independent thinking before you consult before you consult a consultant or anybody who works in that field, a stockbroker or somebody, a financial advisor, before you consult them, do your own independent thinking, right? And follow your instinct. But usually it's a 50-50 thing. So my people are very risky actually. So in Zim, it's a 50-50 thing. In East Africa, it's almost a 50-50 thing. Cool. Nigeria, it's very risky, especially considering my industries. Part of my industries are very risky, like technology, right? If you refuse to evolve, it's very risky. And so it depends on the industry, the industry in question. And besides the industry, it also depends on the fundamental assumptions, the business model, the sustainability. If you agree with the thinking behind the business, then you are good to go. Take a bet, right? If you don't agree, please sit out of that one. It's good to follow your instincts, right? So I'm going to talk about a few secondary reasons why you should buy my shares. I will only talk about 2 or 3. I will start with inflation, right? So what is inflation? Inflation is the phenomenon whereby money loses value over time. We can all agree, particularly in Zimbabwe, at some point, takamborara money dollar for 2. Waitenga mabiscuits nedrinki, chingwa nedrinki, chiwaikuta dollar for 2. But usually, if we ask our siblings, if you ask our parents or somebody, kuti guys, dollar reach kutenga political inflation, and it is now buying less. How do you protect yourself from inflation? You need to put your money into work, into alternative investments, my investment ideas. So if you buy my shares have got the potential to appreciate in value, to appreciate in capital. My capital gains attached to if the business is well managed, you can buy the shares at 50 cents, right? 3 years later, maybe they're not costing $1 or $2 or $5. They've appreciated. So it means that if you buy shares, you can actually protect your money from inflation. How do you do that? If the business is well managed, if the business is very profitable, it is going to beat inflation. So there is a general rule of thumb that I usually use. If a business does well, eventually its share price will do well. So business, the business is at the center. And if the business is doing well, the ownership in that business, the shareholding, will also do well because the shareholders are all taken care of. The share price will appreciate following inflation. Let me give you a very practical example. We are in September, right? 20 September 2022. Share price of Delta was 120 bond. Rate per 700 or 750. In US cents, in US dollars, that was 20 US cents per share, Delta beverages. As of yesterday, that share price is 2,500 bond. The rate is 6,000. That is around 38 US cents 1 year later. So whoever bought my shares at Delta last year in September at 20 US cents, they have made 18 more cents per each share. And share price has risen from 120 bond to 2,500 bond. Ukadautsvaga exchange rate inflation, Zimbabwe, it's very true, but it did not rise faster than the increase in share price at Delta. So it means munhu akatenga mashares at Delta, in this case, I myself included, we've got positive returns. Tabita inflation, tabita currency depreciation. So a very non-monetary and very monetary benefit you take shares, you get to beat inflation and you make returns. If I were to sell my shares today in Delta today, I would make 18 more cents per each share. So effect of inflation on the value of stocks, if inflation rises faster than the share price, what actually happens is if inflation rises faster than share price, what actually happens is you lose money. If you sell your shares, right, you lose money, right? But if inflation rises slower than share price, if the share price rises faster than inflation, you make positive money. I have given you an example with Delta. I'll give you an example, EcoCash. EcoCash, sometime last year, I think it was around 10 US cents. I can't remember the Zim dollar price, but it was around 10 US cents. Usually it's trading at around 3 US cents. Inflation and currency depreciation have risen faster than the performance of EcoCash as a business. As a consequence, a poor performance in business that reflect on a poor share price. So it's all about the business that you buy shares in. If you choose the right business, you will beat inflation. And so the business now, Rawai shares, Rawai is now at the center. So while some businesses beat inflation, some businesses will not beat inflation. Sometimes it's not even the fault of the business because anakontrola kukwira kweshare price ndininewo isusu the buyers and the sellers vanhu vari kuchinjana mashares nemari ndisu tinoita sei tinokontrola kukwira kana kwemashare price. Another non-monetary benefit is nyaya yetax. It's a monetary and non-monetary at the same time. Nyaya yetax, my investors anyway under the sun, they are the least taxed guys. Why? Stock market investor in capital will go there to fund a business. Business rate basare no employer, no employment, no productivity in the general economy. Cannot even productivity in the general economy. What's going to happen? For the politician, it means there is economic stability, there is progress. So a politician here. So the politician is the one who makes these tax laws and it. So the politicians, those guys, anyway under the sun, the investor is the least taxed. Why? Because if you tax the investor, he is going to take away his capital and find somewhere else to put his capital. Because not tax around, but where you can actually make the maximum returns. So you get to enjoy tax benefits. Going back to the Tigere, the real investment trust fund that I talked about, my rates, they actually do not pay any tax. So it means any rental income accruing to that fund and it is distributed to the owners of the fund as a dividend. They don't pay tax, those guys. They've got a tax advantage. They're exempted from paying tax. So the investor is the least taxed. You should know this. Canal employee, we've got pay as you earn. In Zimbabwe, the more, in fact, anywhere under the sun, the more you are promoted, the more you pay in tax. But I'm into my tax brackets. We can go and Google about these things. The more you are promoted, the more your salary increases, the more you pay in tax. But truly for the investor, if you've got shares, if you've got properties, rental income, you are generating rental income only on properties, you pay the least tax. If you've got passive income, if you've got investment income, you pay the least tax. So yeah, you pay the least tax. So I hope these concepts are clear and right. Another benefit, if you buy my shares, we said you have become a shareholder, you have become a business owner, you own the business. Every year means annual general meeting. In this annual general meeting, all the owners of the business, they need to discuss the business of the business. So as a shareholder, if you've got a brilliant idea, and you know what, I think guys, performance as a business is quicker. Why do we improve 1, 2, and 3? You can actually question the CEO. Why did the business make a loss? Why are you failing to beat inflation? Because those guys, the CEO, the chief finance officer, the union, all those guys were not fancy posts who drive those big cars. Their main role there is to make sure the business is profitable on behalf of the shareholder. This simply means the shareholder sits at the top of the food chain. So we're saying if the annual general meeting because you get to attend, you are entitled to attending the annual general meeting uri shareholder, and you get to discuss the business of the business. CEO wanu wako uri utoripota kuti mukuru wangu muri kuti gore rinotanga tine maemployees akadai, takabhadhara mari yakati, macost atakasafa as a business this is the cost of doing business, taita maprofits akati, out of this profit we are going to reinvest yakati, isusu semashefe edu chakwai mari iyi. So I think owning a business is the smartest way. It's the smartest thing to do, right? Because as I highlighted earlier, whether we like it or not, whatever data, whatever mvura, whatever salt, whatever mafuta ekuzora, there is a shareholder out there. Arikuita ma capital gains atataura, arikuita ma dividends, ni mari yako. So why don't you also become a shareholder? What are the requirements to become a shareholder? There are 3 main requirements to become a shareholder. Requirement number 1, another man, and I have said in Zimbabwe, the minimum amount required for you to buy shares, it's $5 or the equivalent in RTGS. You can buy my shares. You can buy 1 share, whatever amount of shares it can buy. The minimum amount is $5. In Algeria, the minimum amount is $1,000. And so the minimum amount in Zimbabwe, it's $5, right? So panda mari, but mari haisi mari school fees gairi kudiwa next semester kana mari yauda kutengesa chikafu next week. Panoda mari yausoda kushandisa money that is not required for immediate use. And mari yekuti iyo mari I put it aside to make an investment. I don't need to use it anytime soon. That money is the one that you invest. And so we have said the minimum amount kana kuri Zimbabwe, it's simply $5. Number two, panoda knowledge. Unofanira kuziva zvauri kuita. When is the right time to buy shares? Why are you investing? Do you know how to set your goals going to the stock market? Which shares, which businesses are you going to choose? But I'm going to take my shares in businesses. How do they fit your investment style or your goals? When I invest in retirement, munhu ari kuinvestira kureza mari yenobola kana kureza mari yekustarta capital start your business, or munhu ari kuinvestira just cash flow kuda kuzvisustain. My investment goals are akasiyana. What you are going to invest in is different. And the businesses that suit us, they are different. How many shares are you going to buy? They're going to be different. For how long are you going to keep them? It's going to be different. When are you going to sell them? It's going to be different. So you definitely need to know what you're doing. What's the panels of Panama dividends, Panama types of dividends, Panama dividend notice, your rights as a shareholder. Panama concept right? I won't go to Bozo Panama shares, Panama $5, what if you buy my shares, they're underperforming? If you buy my shares, a company, right? So you need to do your due diligence now, right? And learn, right? And understand, okay, how am I going to screen out my business and pick the winners? How do you pick the winners? How do you screen out the losers? You need to know what you're doing. It's like Kurima. I want to because this is land. Unotsvaga kuti so taipei acidity levels zvakamira sei, and which crops best suit this soil type, and unoitawo kalito research, and ndozviko kushareholding unoitawo futi kalito research kwaziva zvauri kuita. Haungotibvozva kusati unotonga mashizha wakutonga wakatenga. No, it doesn't work like that. Unoluza mari yako if you do that. And so that's requirement number 2, knowledge. Munofanira kuziva zvauri kuita. Number 3, yatinoti investment account. Bank account iaccount inokuchengetera mari. Investment account iaccount inokuchengetera mashares. For you to open an investment account kuZimbabwe, panogoda bank account iri muzita mako. Kana wafunga kushandisa bank account isiri muzita mako, investment account haikwanisi kupinda muzita mako. So investment account nebank account zvofanira kuita mazita akaita seakafanana. You need to have a Zimbabwean bank account if you want to buy shares by VFX. Sorry, by Zimbabwe Stock Exchange. And if you want to buy my shares by VFX, MasterCard or Visa card, renew it. But for you to have an investment account, you still need a Zimbabwean bank account. So you can actually open a Zimbabwean bank account anywhere, wherever you are in the world. If you're still Muslim, my requirements, Panula passport sized photo, Panula passport biodata page there, Panula national ID of Zimbabwe, name proof of residence. Not a beige English. Proof of residence, Panada national ID, passport, and passport size photo. So usually certified. You can go to the embassy and get this document certified. And you can talk to ZB, FBC, Stewart Bank, all of these banks, they actually open accounts for non-residents. So you approach these banks and say, you know what, I'm a non-resident, I want to open an individual $0 bank account or a foreign currency account. Vanokupa maform, vachakubvunza madocuments andataura aya. Kana vakubvunza madocuments andataura aya, kana certified, you print my form, you fill them, you scan the documents, you scan the forms, and you send it back together with the documents. Within 3 to 5 business days, bank account yako inenge open wherever you are. Kana uri kuZimbabwe, you can download the NMB, kana NMB Connect app, FBC app, Prior, KEBS, all these banks have got applications. Just go and find the application, download. Or you can send me a message by WhatsApp. I can give you my short code on your SIM card without going to the bank. Unokonzerta star chakadaro for NMB, I'm sure it's star 204 hash, right? On your Econet SIM card, your network SIM card, your Telcel SIM card, you can actually open a bank account without going to the bank. So you can do it via an application or my short codes. Zimbabwe, if you are a non-resident, you are going to open this bank account using the emails, right? You can also contact me. I can give you my phone numbers or these emails to email, right? And I would recommend my banks and also recommend are very friendly when it comes to charges. Your NMB, your FBC, they are good, those ones. So these are the requirements for you to become a shareholder. Your money is sold out under next week or anytime soon. Right? And then your investment account, for investment account, you're good to go. You simply put money into investment account and you buy my shares. By the way, when you buy my shares, you get a receipt, proof that it could have used to get a certificate and share certificate. But now we are living in the digital era. So my shares, they can actually be bought online or offline. You can open this investment account offline by talking to a stockbroker. I know the stockbroker and the annual. Imagine wapinama okay and the supermarket, okay, that supermarket, you want to buy some goods, some groceries. Imagine those groceries to be shares on the shelves. So imagine the supermarket to be the Zimbabwe Stock Exchange, the stock market. So when you go there to the supermarket, you pick your groceries from the shares. You are taking shares anyway. You are taking shares from the Zimbabwe Stock Exchange in your desired companies. When you want to go out of the supermarket, unodarika T operator, and it udarika T operator. When T operator, you are going to give them, they will scan this barcode and give you a receipt. Q operator on stock market and stockbroker. So you get into the stock market, you want to buy whichever shares, you place your order. The actual happening when you go to the stock market, the stockbroker is the one who's going to give you a receipt. We call it a broker's note or a deal note. So the stockbroker, think of the stockbroker as the Q operator on stock market. There's a national government, they talk to the stockbrokers. Can I okay at any given moment in time? Can I buy a three material operator? They actually know the two operator number one. Padarika 15 watenga 5 liters mafuta. Two operator number 2. Padarika 5 watenga 5 liters mafuta. Is the same thing in stock market. They are going to know pana stock broker A nasi patenga 7. Para 7 watenga mashezi econet. Para 5 watenga mashezi kwakati. Pana stock broker B. Pana stock broker, they have that information. This is how they get it. So you open an investment account by talking to your stockbroker. You can find my stockbrokers. I recommend your stockbrokers, or you can talk to your bank. They know these things, and they actually know these things. If you say to your banker, you know what, I want to buy my shares, can you direct me to the stockbroking division, Red Bank? If it's your ZB1, ZB secretaries, if you're FBC, they've got FBC securities, they're into stockbroking, right? One people for this investment account. So you choose the way you want to go. You can simply talk to your bank and tell them, you know what, I need an investment account. But this is the offline method now. And they will open investment account for you. It means whenever you want to buy shares, you send it to them. And they don't marry they give you my instructions. What go the tenga my shares tenga my shares Delta, they will buy the shares. Or you can do it online. We are living in the digital era. You can download application as Zimbabwe Stock Exchange, or you might know the C-Trade. They are both licensed and supervised by the Zimbabwe Stock Exchange. I recommend C-Trade. It is cheaper. And you download your C-Trade, you sign up people to create an investment account online. And then the internet banking attached to mobile application, you don't need to go to the bank. It's the same thing. Mobile application shares investment account, you don't need to go to the stock market direct in person. You can actually do these things. So Pane ZSC Direct, right? That's the application is Zimbabwe Stock Exchange, the official one. That application can mutually, if you are listening, you can actually go to App Store or your Google Play, download that one. By signing up, they will ask you for your bank account, right? You can also download another one called C-Trade Mobile. I recommend that one. I used to use both ZTC Direct and C-Trade, but nowadays I use C-Trade. It's cheaper. 1,000 RTGS buys more with C-Trade. Not C-Trade Mobile. And it's also supervised. It's monitored by the Zimbabwe Stock Exchange, and it's legal. The most challenge is if you have my grievances, you can actually go to the stock market, you can email them, you can show them their receipts, you can tell them investment account, and all grievances will be solved or will be addressed. So there's this bank of monthly charges. Of course, my Zimbabwean banks, they have got monthly charges. So even I use ZB Bank, that account, that will connect 2.5 years ago, right? So they used to charge me $1 a month, 180 account maintenance fees. They used to charge me $1 a month. But because of inflation and all of these things, 2 months ago, I noticed they now charge me $5 a month. So I've been considering migrating because I can't give them $60 in terms of monthly maintenance fees. So depending on the bank, all Zimbabwean banks have got monthly maintenance fees. My banks in East Africa, especially Kenya, they've got zero charges when it comes to monthly maintenance fees. Right. So the bank account, you call Zimbabwe, any monthly maintenance fees. And to the best of my knowledge, as of today, your CBZ, no, not your CBZ, your CABS, sorry, your CABS, your NMB, and your FBC, IR3, they have got my user-friendly, especially student-friendly bank charges. Your FBC, your NMB, your CABS, and it. Then, you have an investment account, you are only charged when you transact, when you buy or when you sell, depending on your charges. If you don't buy or you don't sell anything, the investment account does not accrue any charges. They don't take anything from your account. They don't take any money. They don't charge you. They simply charge you when you buy or when you sell. And so it means if you're someone who is very active, like a short-term trader, a short-term investor, I'm taking some shares, really short-term, over a long period of time, because because they charge you per so pakutenga, the total cost involved when buying shares, the total it's 2%. They take 2% of the money, 2% of the transaction value, charges. Then when you are selling 6%, charges. So if you buy my shares today and you sell them within 6 months after you bought them, they charge you 4% tax, the capital gains withholding tax. God willing, in another session some other day, we are going to focus on tax only. Today we've only touched a little bit on it, but panel the capital gains withholding tax. You might want to write this down and go and research capital gains withholding tax, capital gains tax, panel difference there. So they charge you what is called capital gains withholding tax. It's only 4% of the transactional value, right? If you dispose my shares within 6 months. But if you buy some shares and you dispose of them after 6 months, they charge you 1.5% capital gains tax. So in total, if you are selling shares that you have bought within 6 months, if you are selling them within 6 months, you incur charges that are up to 6% when you sell them. When you buy, it's around 2% or 1 point something. Let's just round it up to 2%. But if you're selling shares that you bought after 6 months, like it's now after 6 months after you bought them, it's been way over 6 months, 6 months and above after you bought the shares, you're going to incur charges that are around somewhere 3% total charges when you sell. So it means the total charges you incur buying and selling, it's around 8% if you're doing it within 6 months, and it's around 4% to 5% if you're doing it after 5 months. So imagine example and up that this is an employee. The more you are promoted, the more you pay in tax. The highest amount of tax they can take from you in Zimbabwe is 40%. So imagine somebody out of 40% as pay as you earn. In the stock market, there is somebody who bought some shares 2 years ago. They are simply going to take 1.5% as tax. Look at the difference between 40% and 1.5% tax. The investors, this is why the rich get richer, actually. It's because they invest more of their time into owning assets, things that put money into their pockets. They invest their time into shares. Actually, if you study anybody who is successful under the sun, most of them, if not all, you cannot be successful usina own a business. Either it's a private company or it's a public company, because that company has got ownership, private or public, it's shareholding. If you don't understand that, I'm trying to say you cannot get wealthy or anyway. And if you cannot get wealthy being an employee, you simply need to own my assets. And if you own my businesses, you're a business owner, you're a shareholder, you're an investor, you pay the fewer taxes. So you managed to get a real estate investment trust here. It's a fund. A fund is different from a company, but my dividends at Ataura are nowhere, my capital gains at Ataura are nowhere. The minimum amount I gain is $5. There are more real estate investment trusts that are on the way from Zimbabwe Properties and Old Mutual. They are going to arrange more funds. So they will actually put my IPO. We are anticipating them this last quarter of the year. My months are salary, and sometime next year. And we are expecting that Old Mutual will come to the public and say, you know what, if you're interested in owning some properties, give us your money, right? I'm sure they will put Canary IPO values are the minimum amount you want to accept. It can be $15, 50, I don't know. But if you can't afford the IPO, you can wait. Kutiana stock market. Once it's there in the stock market, you can now buy with as little as $5. You can own more property. So the Old Mutual property portfolio, they have built a student accommodation. A student accommodation block. So you know if the schools are open, such that it can serve my students poorly, it can serve my students and it means local vocational training centers, right? So students, they always pay their rents, and that's guaranteed rent or cash inflow in form of dividends, right? So it safe for IPO. I would go for that IPO, your mutual, your listed investment trust, because it's guaranteed to close out the property portfolio. I agree with it. My students are not actually, they will come to me as an investor, they will report, could out of the 1,000 rooms we built, only 900 have been occupied, 100 are not occupied, and so can you elaborate on all the charges you generally incur from dealing with the same banks? So when dealing with the same banks, the general charge is 30, monthly account maintenance fees, and it's lower KEBS, FBC, NMB. It's higher ku First Capital Bank, ku ZB, ku CBZ, ku Stanbic. It's very high. It's $5 a month. So the other charges, Panama transactional costs, Panama IMTT tax, intermediate transfer tax. So they charge you 2% per every transaction that you do, right? But the good news is, Tambov Tower, as an investor, you have the least tax. You don't pay any tax. So with some of these Zoom banks, the charges you're going to incur are two. One, monthly maintenance fees. Two, transactional charges. They can be 1% or 2% only. 1% of the transaction. If you are moving 100,000 Zim dollars, 1% of that is actually 1,000 bond is going to be the charges, right? Then you add the monthly maintenance fees you are not deducted per month for 12 months. If you don't transact, the only charge you're going to incur is monthly account maintenance fees. But when you transact, you don't pay tax. You actually have to tell them, constitution, it's SI 205 of 2018. I should not pay tax when I'm dealing with transactions. Shares. They know. They will pay your tax, they will deduct that tax. So you actually need to be aware, and you actually need to tell them, I'm entitled, it's my right, I should not pay tax, right? They will tell you what to do so that your transactions cannot take some shares, deduct tax. This transaction was for my shares. My transaction I only follow face some charges. Vanozotora mari yavo tax yavo vangaifanira kutora pane mapenalties. So please usazoita fraud and usazonyeba kuti I want to do a transaction yemashares, iwewe usiri kuita transaction yemashares. They follow these transactions verify you. So when you are doing transactions yemashares, you don't pay any tax. You simply pay 1% depending on the bank. It's 1% or it's 2%. With ZB, I can confirm it's 1%. With KEBS, sure, bank, it's 2%. With NMB, I'm not so sure. With FBC, I'm not so sure. So it's usually 1 or 2%, and there is a minimum amount and there is a maximum amount they can take from you as my charges a transaction. So these are the two charges I will incur if you are dealing with banks in general. If not in shares, you add tax. Also, if you want to apply for a Visa card or a MasterCard, you can do that no matter where you are, even if you are a non-resident. Or if you apply for a bank account, you can tell them, I need a virtual Visa card, right? You can actually tell them, someone else will collect, right? So the only difference is that when you need to transact online, and you can actually use your Visa card, you can actually use a MasterCard that is in your own name. You open that MasterCard or that Visa card the same way in which you open a bank account. And you can actually do that whether in Zimbabwe or you're not in Zimbabwe. You simply need to know, okay, service provider, say, are they expensive or they are not expensive? If you are happy with their business conditions, you open a Visa card or a MasterCard in the bank account with them, you're good to go. And other additional detail is you can actually buy shares from Kenya, you can actually buy shares in the US, you can actually buy shares in UK, in Nigeria, in South Africa, everywhere, wherever you want. The process is the same. You need a bank account, you need an investment account, you need to know, you need to have knowledge of what you're doing. So in this part of knowledge, I'm a certified financial literacy trainer. If you're interested in knowing more, and especially in this knowledge part, I can teach you the approach that I teach, and you can take my investment course. I have a course that I offer on investment. It costs $30. It's a once-off payment, and it takes 5 weeks at most if you devote an hour a day. So I can actually guide you around and tell you the ins and outs, especially of the Zimbabwean market. And I have quite some experience now. Through my elections, how do you manage your portfolio? How do you pick the winners? You have got policy inconsistencies and all of these things. So as a closing remark, before I will take further questions, can I put in more questions? I want us to always remember that, wherever we are, whatever transaction that we are doing, there is a shareholder out there. Takuziwa requirements of what is needed from me for me to become a shareholder. It's not much. $5, the minimum amount. Know what you're doing. Open an investment account. And so whether we like it or not, we're interacting with businesses all the time. The primary reason, the primary goal of going into business is to make profit, and on behalf of the shareholders, right? So this is something that we need to always remember. So again, if you are interested in also learning about budgeting, if you struggle with budgeting, your money management, your money and emotions, your financial goal setting, you can also get in touch with me. If you take that investment course, I can teach you the other financial literacy course for free, right? So I also wrote a handbook. I'm going to share it with you. If you're not in the other group, please inbox me, send me a message, find me on Facebook or anywhere, or WhatsApp, send me a message. I will send you a handbook. It summarizes and it expands further zvinhu zvatirikubva mukutaura izvi zvokuti what are shares, how do you buy them, nepane mamwe mareasons handisina kutsanangura, right, mabenefits, pane mamwe maconcept andisina kutsanangura. Try to keep this short and to talk about the most essentials. So the handbook is for free. You can read it for free, and you can share it with whoever you want to share it with. And of course, if you have any questions, you want to open a bank account, you want to do anything concerning these things, my inbox is always open. So the bank account, which is not the investment account, is guaranteed to be charged monthly fee, whether the money or not is there in the bank account. Yes. So the bank account is different from the investment account. The bank account, the moment the MGO is active, it's now incurring monthly maintenance fees. It's unavoidable. But the investment account, you can open an investment account and never buy shares. It will still be at zero. Because it's zero to be at zero. But when you buy or you sell shares, they will take a small percentage from you. I've given you the percentages. If it's a bank account, whether there is money or there is no money in that bank account, it will incur charges. And when you say summary, and also, I'm not sure for how long do they keep this bank account open until Vara. I have a nostro account, a foreign currency account, and I have Varanasi business in 2021. I used it once, I never used it again because I had to, right? I'm sure that account was closed because it's been years. And if it wasn't closed, I'm not going to try and risk it and put money into that account because you know what? I'm not going to try that. So it means whenever I want to deal with foreign currency again, I need to open a new foreign currency account with the same bank or with a different bank, or I will ask them. So the bank account, definitely you incur monthly maintenance fees. This is Zimbabwe for you guys. That's how these banks money. So that's how these banks make money. But if it was a different environment, like Algeria, I'm sure there are banks which do not charge monthly maintenance fees. East Africa, your Kenya, your Tanzania, your Uganda, Panama banks are single charge monthly maintenance fees. Most of the charges per no transactor. So you can actually leave your money there, it will still be there. But in an inflation. So another alternative investment trust, another Kangama, it's called the money market fund. You can talk to your banker again. Instead of leaving my own bank account, talk to your banker and say, I want you guys to put this money into a money market fund. They're going to explain to you what is a money market fund. It offers competitive returns. It offers interest really better than your savings account. So information about money market funds, you can talk to your bank and ask them, I want Maru Isagare in one inflation, and it please put it in a money market fund. What are the terms and conditions? You can withdraw your money at any given moment in time. That's one thing guaranteed in money market fund. But you need to ask now the bank, can I fund the loss? What happens to my money? Right? I'm not so sure what happens with money market funds here in Nigeria and in Zimbabwe, but in East Africa, I know there are funds that even if they give you your principal, your WISA, and I still know there are funds like that exist. Some of them they don't do that, and it can fund get a loss. It's a risk. No, I say, no, it's a loss, and yeah. I don't know. Is there any other question? Any other burning question that needs to be answered? So if there is between shares and bonds, which one do I recommend? Okay. Between shares and bonds, it now depends on your investment goals. Why are you investing in the first place? So my investment is necessary my shares and digital real estate. Panels my government bonds and treasury bills. I think they were mentioned in passing. If you want to learn about them again, you can contact me. It's part of the investment course that I offer. So it depends on your goals, but I would recommend with somebody who is retired and they're investing for cash flow. You can either put your money in high in dividend yield in high yield dividend companies or dividend paying companies and companies and paying dividends and so you can put your money there, or you can put it into a high interest. You can put it in a high interest bond, right? So generally, I encourage a balance between a bond and my shares. You can create a portfolio, but since we are young, we don't have much responsibility, right? This is the time to be learning Zuma investments is withdraw pharmacy and taking bigger risks. How do we do this? I would recommend if you find yourself in an environment, you know bonds and NEMA shares, maybe you can tilt your portfolio and say 60% investment in shares, 40% my bonds. And my bonds are safe and they are guaranteed and they are for cash flow. So if you're someone who's looking for guaranteed cash flow, yes, my bonds are right. But you said I think we've seen what happened with Silicon Valley Bank, and it shut down because of my bonds. My interest rates are as with my funds will not be in the biz. So in general, I would say you need to strike a balance. If you're someone who's headed towards retirement, we are now very old, in old age, I recommend to stick to bonds, invest more for your money in bonds. If they are safe, they are guaranteed. Cash flow nowhere, interest nowhere. But if we are younger like this, we've got more time, more energy to take on more risks. Let's put our money more into shares. Let's time for capital gains and my dividends. My dividends, capital gains, two birds with one stone. My shares, dividends, capital gains. My bonds, they simply give you interest. And can inflation rise but any interest here? Because my bonds on the board, they are fixed and the interest rate is fixed. So inflation rise that interest rate you are going to lose your money. So I would say for somebody who is headed for retirement, or somebody who is looking for something that is very safe, go for bonds. But if you're also looking for safety, you can still go for my dividend paying stocks or my dividend paying shares. And my shares are no potential because increase in value in the future such that they can give you more capital gains and so on. I hope that you are answered. So I myself, I've actually been considering my bonds, my infrastructure bonds, animal competitive returns. Inflation now is 6.5%. They usually offer up to 14% interest per annum. So I've been considering that. I'm still thinking. But as I've been saying, I also practice what I teach or what I say. I'm still young. I've got the time and the energy to take on more risks. So I lean towards more my investments into my shares. My bonds are say 35 or 40 focus strict no retirement. Then my bonds, maybe it can be 50-50 portfolio. But it also depends on personal preference. But generally, I don't recommend heavily exposed kuma-bonds zvikazoenda nepasaidi unopinda busy, and you need to strike a balance between your shares and your bonds. You can have shares in companies or in funds that are into real estate or funds that are into commodities like gold, like oil, like your grains, your platinum, your rare earth metals. And you can have shares in there, or you can put your money into bonds. So I hope that you are answered. Do we have another question? How do you use money by shareholding? So of course, capital gains and dividends, but it doesn't mean that they are all roses. And example, at inflation, you can lose money by inflation. If inflation rises faster than your shareholding or the increase in share price, you lose your money. If company kavara, right? If you are an ordinary shareholder, if company kavara because of financial challenges, you definitely lose your money. But company kavara because they simply voluntarily, they are simply closing voluntarily, you can get your money back. But it's not my risks as well. So it's all about you as an investor. Which businesses are you going to select? Which businesses are you going to choose? And it's all about you and the businesses you choose. If you pick the winners, you might. Delta has been around. Delta Corporation has been around for 125 years. That one is very safe. It's guaranteed. And list of cheaper banks. My banks are at the given moment are cheaper. I said NMB and your FBC and your CABs. Especially if you're in Zimbabwe, try your CABs and your NMB. But it's also very cool now kuvura mabank accounts and CABs via the email. These guys, they are complicated, but not super. But I recommend your FBC, it's a good one. NMB is another good one. And so NMB, CABs, FBC, these ones, they are very, 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 very friendly when it comes to my charges. They are cheaper. Kana wafunga kufa enda kuCBZ uko kunotorwa munhu mari. And your first capital bank uko kunotorwa munhu mari. And ZB, I don't understand what happened with these guys. They used to be user friendly. I don't know what happened. Maybe the economy is happening to them, but the economy presents more opportunities. So tichitopedza ko mangana kune munhu achanotenga mazowe arikutoisa mari mumashareholder aichi edelta kune munhu achatenga Tata Econet mashareholder Econet arikuita mari nemunhu iye pane achatenga mvura Vivon pane achatenga Kung Oil, all of those things kutoitira vamwe vanhu mari. So we can also do these things. And so do we still have other questions? If not, I hand back this time to MC, our brother, MC Kiran Kamwendo.
Okay, thank you very much for that detailed explanation. Yeah, like Doc is saying, we really benefited a lot. You really got into all the intricacies of financial markets, the stock exchange market. So I hope each and everyone who's listening is going to be able to use this information to, better their lives and also share it to others who are not here. So thank you very much for sharing this information with us. It's some people who have the information who only withhold it to themselves and not share it with others. So yeah, we really appreciate you taking your time and teaching us a few things about everything you've talked about. At this point in time, I would like to give a word of prayer before we close our meeting. So may we bow our heads and pray. Almighty Father, we come before your throne again. Thank you for being with us throughout this meeting. May you help us apply all the knowledge that we've gained. In Jesus Christ's mighty name, we pray. Amen. So thank you very much, everyone, for joining us today. Those who want a recording of this meeting, I'm going to post it in our Telegram channel. So you can just head over there. If you do not have I'll send the link again in our WhatsApp group so that you know where the channel is. Good night to you all. See you next time.